So a big firm, a well-respected firm, heavily watched firm, came out and updated their views on this particular stock, and they said that this stock, they believe, is significantly mispriced. And just an FYI, I agree with them. In fact, the analyst consensus here from tip ranks is that this stock has roughly 50% upside from today's prices, which is a huge opportunity here, guys. Now, the stock that we're alluding to here, guys, is Splunk, ticker symbol SPLK. But wait, before you click off of this video, hear me out, listen to this video through, because I'm going to explain to you why I believe this company is not only overlooked and undervalued, but why I think this company can outperform the market quite easily over the next few years. So here's the official note from Jefferies. This is the firm that states that Splunk is significantly mispriced. They go on to say the stock trades at 7x 2022 revenues, which is 45% cheaper than its peers. This is because their revenue growth has been misunderstood and investors don't realize that this company will resume 20% growth year over year very soon. To see a 7x price to sales for a growth stock in the SaaS space that has subscription, that has cloud, that has everything you'd want in a business, you don't see that very often, guys. This opportunity does not always come around. Splunk is actually one of those companies where you look at the charts and you're like, wow, this is in a downtrend. What's wrong with this company? And then you look at their income statements and you're like, oh, well, their revenue didn't grow last year, so that's what's going on. Investors are fearful. There's issues with this business. And then when you look at just other year-over-year metrics, you're like, yeah, this company, it's done. They don't really have a future. No wonder the stock chart is down so much. And I get that. I mean, if you're only looking surface level, you're looking at the charts, you're looking at year-over-year comparisons, and you're like, this is not an investable company. Yeah, I guess so. I guess that's true. But here's the thing. On this channel, we don't just look at surface level. We look beneath the covers, we look at what's driving the stock lower, and we look for opportunities with that. Sometimes stocks just get mispriced, right? There's just a whole lot of fear, a whole lot of selling irrationally, and then eventually over time, investors come back to their senses and they put money back in the stock. I believe that Splunk has experienced this phase of irrational selling, fear, FUD, everyone dumped Splunk stock, and now slowly over the last week or two, we're starting to see money start to flood back in, and we're starting to see the stock, it's up quite a bit off of its lows. And I think it has a long way to go before this thing actually tops off. Now, I understand, if you look at this chart, their annual revenue dropped year over year from $2.359 billion in fiscal year 2020 to $2.229 billion in fiscal year 2021. How could you possibly look at this business and then look at other companies in the SaaS space, data analytics space, and say Splunk is a great company, a great investment? It's tough to do that unless you truly understand the value this business brings, the moat that they have, the customer base that they have. I think that once you spend the time to understand that, you'll understand why Splunk is a golden opportunity. So a lot of people wouldn't call this a growth stock, but I think it is. And in the last year, maybe not, but going forward, definitely so, and here's why. Splunk is transitioning to cloud and recurring revenue. They've traditionally been a business that sells on-prem and it's a one-time fee for their product and their services and maintenance. But now they're transitioning to more recurring model, which means they don't realize as much up front. So if you look at these charts, you can see that their revenue, the recurring revenue, and cloud revenue is exploding. It's seeing massive double-digit growth, similar to high growth stocks like Palantir even, and this is part of the business that Splunk is heavily focusing on transitioning to. So yes, in the short term, as this transition happens, they don't realize as much money right away up front, so their numbers year over year don't look as strong. However, you give them like a year, maybe 2 years of transitioning and having most of their revenue come from recurring, and then you can compare year-over-year metrics, and then you'll start seeing growth once again. That is pretty much the phase that we're entering right now. We've started the transition a little while ago. We're in the transition right now. And now when looking out, the next few years, we're starting to see some growth. Analysts now see 13.8% growth this year and over 22% growth next year. And this accelerating growth is something I love to see. And you got to realize a lot of it is now coming from recurring revenue, which personally I think is the best kind of revenue because they can upsell, add more features, add more functionality, add more services, and just keep growing that customer. The outlook now for Splunk after this last painful phase that they went through is strong. And this is a big reason I've been buying Splunk fairly regularly, guys, over the last few months. I've been averaging in, lowering my cost basis. You never know where the bottom is for these kind of stocks, but when I started to see value, I started buying in, and I just started averaging in more and more. And yeah, granted, this sold off a lot more than I expected it to, but not complaining. I think this just gives us an opportunity to see even better returns long term. I think to find a company that's misunderstood, mispriced, and severely undervalued in this market today, while being a world-recognized brand name, it's tough. It's tough to find, but when you find those companies, you gotta have high conviction and you got to go in heavy, and that's kind of what I've been doing. I'm not going all in, of course. Within reason, I put my money in this, but I think this will be a big winner for me. Now, the core reason I really like Splunk, apart from the fact that it's super undervalued, is because of the space that they play in, which is big data analytics. The world is shifting to more and more, machine data, which is big data, and we need services and companies to analyze that data and make use of that data, and Splunk is at the forefront of this. They help a ton of organizations with this. Most of the Fortune 100 companies, I believe it's over 90 out of the Fortune 100, uses Splunk and Splunk services. So it's clear that this company is not only engraved in, massive businesses, but they provide something that companies actually want. I think that as we keep transitioning to this world of big data being forefront, Splunk has the opportunity to become a $50 to $100 billion company in the next few years. Today, the stock is sitting at a market cap of just under 20 billion. So this alone will give us a huge return, guys, which would be of around a 3 to 6x on our investment, and this could be realized within the next, say, 3 to 5 years. You do have to understand though that Splunk is an enterprise play, so because of that, it's not going to be like an Apple or an Amazon or a Google or a Facebook, right? It's not going to be a $1 trillion giant. I don't think it will, but I think it has a good potential to be, like a company like Salesforce or a company like ServiceNow, which is, $100, $200 billion company with strong metrics, strong profits, and strong growth. In my opinion, the future is bright for this company, and investors are still not giving it the attention that it deserves, the appreciation that it deserves, and, as individual investors, this is the opportunity we wait for, and I am not missing out on this. Now, on June 2nd, Splunk will be reporting their earnings, and I'll be listening to this one pretty closely because if we're lucky enough to see prices drop down to close to $100 once again, I will buy more shares, but I suspect that we should probably get some good outlook from management here on this call, which could send this stock much higher. Let's be clear, I'm not gambling on earnings. Despite what happens, I won't be selling my Splunk shares unless the business is like, our transition failed, we're closing shop, I don't think we have a bright future. If they say stuff like that, sure, then that changes the fundamentals and I'll consider selling. But if they just come out and say, things are going well, we're transitioning well, we're seeing success in this, customers keep growing, customers keep coming back for more services, everything's playing out the way I expect it to, so why would I sell? In fact, I would look to add more. I think that even at today's prices, even at $120, $130, $140 per share, this stock is undervalued. So I'll probably just keep DCAing in, dollar cost averaging in, because when you look at its peers, you look at Datadog, you look at Elastic, you look at JFrog, you look at even Palantir, which is in data analytics. Yeah, this company is just way too cheap. Either those companies need to come down significantly or this one needs to go up to catch up to them. And I think that the latter is most likely to happen. But anyways, guys, if you stuck around to the end of this video, I truly appreciate your support. Thank you for that. And I do hope that this company, does well over time. I got my money invested in this and I have my conviction in this. So we'll just have to wait and see now how this thesis plays out. Thanks for watching, guys. Don't forget to invest positively and I'll see you in the next one.